now we get to turn to Europe. And Lagarde spoke today. She announced the end of quantitative easing. The fact that it took this long is fascinating in its own right. But it's going to be ending as of July 1st. And now there's a talk of raising rates in September and October by 50 basis points each time, bringing us back to, if you just look at the deposit facility rate, marginal lending rate, you're talking about going back to either zero or about 1%. So again, you're starting to see that movement. And the reaction is, as we've been saying, is this is kind of that pressure point that we've expected to see as people, again, the inflation has just gone parabolic. They were going to have to do something to try to get in front of that. So when you start looking at the continued upward surprise is challenging ECB's views. I've showed these before because I find it funny, and you can see that there's typically this view that inflation spikes and then fails. Yeah, but no, it continues to edge higher. Obviously, Russia-Ukraine was a bigger shock when you think about what happened in February from let's call it realistically March on. But look at how wrong they were the whole way up. And again, that's the bigger issue that we continue to see is this was a problem before Russia-Ukraine. I am not saying that it didn't make it worse, but it was already a problem, and there was never a point it was getting better prior to that, which is why we continue to see that upward surprise. Now, the Eurozone household real disposable income is getting squeezed further. You can see it is now down to about 4%, let's call it, about 4% shrinking in terms of real disposable income. Wages have started to go back up, but now because the ECB is so late, I think it's now 131 months since the last time they raised 131. I forget what it was, but I think it was months that they had raised rates. And that's when you're seeing, I think it's 131 months since they've raised rates, which again just shows that they're so far behind. Do they have an issue or in the fear of a wage spiral? I don't think it's as aggressive here, just because you're not seeing that the consumer was already weaker in Europe. But again, this is going to be something to watch. As Eurozone retail sales have now dipped below the normal trend, and we expect that to get worse as we see the gap between consumer and business confidence continuing to worsen. Business confidence is going to come down. Typically, it follows where consumer confidence is, obviously not perfectly, but the trend is typically in the same way. But businesses are also seeing a bigger and bigger hit on factory gate prices, other prices, which will become a much bigger issue over time as well. Now, the Eurozone, when you think about the PMI manufacturing output, official manufacturing output, PMI orders inventory is firmly negative. Manufacturing PMI kind of sticking around, but the orders to inventory is where we see some of the biggest hits and the biggest problems going forward, which again is that leading indicator, which is why when you look at growth trackers on the financial and economic variables, you can see that the leading indicators are showing that negative growth, which is why we do believe that, again, Europe is already in a recession and seeing negative growth and pressure for all of these reasons we've outlined. Now, market expectations for the total ECB rate hikes in 2022 is at about 1.26%. She's essentially guided to 1%. So to see another 25 basis points thrown in there is not crazy, but again, still something to look at. And this is something that we were discussing again. When you're looking at the recession risk is very high in Europe, as the Eurozone PMI is again following what typically is a leading indicator of the Sweden new orders to inventory, and we do expect that to come down and has already hit those pressure points. Now, when you look at Germany exports increased in April, which is that nice positive. We do see some of that strength in there, which is a tailwind for Germany, which is a net exporting nation, and some of the benefits that we've seen. But imports also went up, and again, that's a stronger leading indicator for where we are in May. But on the services side, the expectation PMI was expected to be 56.3, came in at 55. German composite was expected to be at 54.6, came in at 53.7. Now, factory orders month over month was supposed to grow by 0.4. It shrunk by 2.7. Factory orders year over year was expected to be down 4.1%. It was down 6.2%. With German construction coming in negative with below 50, so contraction at 45.4, worse than the previous month. So again, a lot of those leading indicators really pulling you back down. With industrial production expected at 1.2%, came in at 0.7. Year over year was expected at negative 2.4, came in at negative 2.2. So again, all of these are showing some of this negative, but the exports, when you think about cars, there's that backlog. So there's some of that will offset a little bit of that pressure and supporting a bit. So it's not like we're going to see this huge drop off in growth of negative 5%, but it's something where do we come in at negative 1%, negative 0.7%? But again, you're starting to see those headwinds emerge. Now, looking at this a bit differently and why we focus so much on Germany, which is the largest economy, is the German economy will be weaker than all but one of its Euro area peers, and there's still an expectation of expansion. And this is where we disagree with the assumption in terms of where things are. And then the top 10 trading partners, obviously with China, we've talked about the relationships and the issues that Germany has with China right now as China slows. U.S., something very similar. So again, you're seeing the size of the pool in 2021 getting smaller, and again leading to some of those pressure points, which are also happening on the real retail sales in Germany. So not only on the manufacturing side, the construction side, but also on just real sales. And you can see that the volume has dropped off in a big way. It's still above where we were in 2020, but you can see that there's still that downward trajectory. And given the pressure on wages, given the other pressures in the economy, we don't see that adjusting soon. Now, when we start looking at German spending cutbacks, very severe cutbacks, you can see that is increasing monthly households net income. Obviously, the lower you go, the more cutbacks there are. So you're seeing that hit to underlying consumption, which again is going to be that downward move in some of the underlying assets. German manufacturing orders is at the lowest it's been since essentially the beginning of 2021, end of 2020. We see that moving a little bit further down. And then when you look at manufacturing orders, consumer goods coming off the highs, and we still see that downward trajectory. Industrial production, we see that bouncing sideways just because there is some of that export capacity. There is some of that catch up that has to happen. And then industrial production, excluding construction and energy, is fairly flat. But once you factor in construction, you can see that there is a lot of pressure to the downside. Italy manufacturing PMI still positive, but you can see that it is moving negative. And then when you start looking at PMI output index, it is negative. It is in contraction, and it's showing just where the movement is headed, which again is is going to be a negative direction. Which is just all of these things are pointing to the problems that we've been outlining. And obviously the increase in inflation, the increase in pricing is going to be an extra tailwind to that, making the ECB jobs harder. And this is what we were talking about with Italy, new orders really coming under pressure, coming into the negative territory. Italy was kind of that bright spot, and now that bright spot is shrinking. And because this is a key leading indicator. So we've talked about France. France has been fairly flat. But Germany, it was already weakening, continuing. But now Italy, which was holding up, has started to falter. And again, that's where we see a lot of this being pulled down and a lot of these pressure points coming through, which is why we've seen spreads widen out, why we've seen these problems, all as the ECB is trying to now finally get in front of this. But again, too little, too late. So that's what we have for you on the Europe front. In the next segment, we're going to go deeper into China and some of the issues that we're seeing there.